It is Wednesday the 9th, and just like we never know if a pullback is going to be the end of a rally or if it's just a pullback, we never know if this bounce is going to be something that turns around into new all-time highs or if it's just a bounce. There's a case to be made for either way. We're back above the year-to-date VWAP, that's positive. We're above the 20-day moving average, that's positive. It's positive we're above this prior support, which had been resistance in a battlefield for a little while. And you could also look at this and say we're below the declining 50-day moving average. That's potential resistance, and this entire rally has come on diminished volume. So again, you could make a case either way, which is why we continue to be focused on the action in individual names, being mindful, of course, of the larger trends and careful not to chase. We had a gap higher today and closed right above, right at the highs. That is. So intermediate term, we're back above a rising 5-day moving average. That gives the benefit of the doubt to the buyers. And I think that as long as we stay above this little area where we have that 5-day moving average, the month-to-date volume-weighted average price, and the year-to-date volume-weighted average price, that things are being constructive within an overall questionable bigger picture. So again, it comes down to stock selection, and fortunately, we've got some good names like Expedia and KNBE, Checkpoint, NTR, and MIH, etc. Anyways, let's take a look at the Nasdaq's kind of same story, up to the 200-day moving average, rather, above the 20, and below the 50. Volume diminished in here as well. Intermediate term, that's where we make our money. So I think as long as we're above that 5-day moving average, that we've got to give the benefit of the doubt to the buyers. I think that we probably look at the week-to-date volume-weighted average price. That's starting to catch up to the month-to-date VWAP. So that's going to be an important area right around this 360-ish level. What I'd like to see, and the market doesn't care what I want, is something like this tomorrow, and then perhaps a continuation. That would get us, what it might look like is tomorrow. This would be the 2-day volume weighted average price coming in like this, and then tomorrow's VWAP would look like this. So then if that were the case, we would want to be a buyer above here with a stop below the low of the day. It's one potential scenario. It's certainly not a prediction, but it's something that might happen if we can are able to continue to rally here. That could be a scenario that would make it happen. The Russell 2000 finally made it above its year-to-date volume weighted average price. As we know, it's been a laggard, but the key level that it bounced from was the volume weighted average price from that 2020 COVID low. And this is why we have to use multiple time frames to be aware of when we're at that bigger level. It doesn't mean take action. Some people think it does. To me, it's more about then confirming on a shorter term time frame. We got rejected on this attempted breakout, but now we're back above the year-to-date volume weighted average price, and I think that as long as we remain above this rising 5-day moving average, we'll look for further upside. The question is, do you chase it here at the end of the day like this, or does it do something along these lines like I just sketched out in the Nasdaq? That would be the preferred scenario. The market doesn't care what we want, though. The semiconductors are also in rally mode like everything else. They're through the year-to-date volume-weighted average price, but they're now up against this prior band of support in here, which has the potential to become resistance. A lot of people say, hey, it's at resistance. Tomorrow if it runs to 295, the people who said it's resistance will be wrong. It's a potential level of resistance. It's an area that we want to look at for confirmation on shorter term time frames that it does in fact turn away from here, and usually that's not the case with a rising 5-day moving average. Now again, short term or extended, look at what happened today. We gapped up and we got back above the volume weighted average price. Nothing wrong with buying in a condition like that as it gets back above the VWAP with the stop below the low of the day. Tomorrow, I'd like to see it come down to what would be here. This is what our 2-day volume weighted average price would look like. If it comes down like this, and then again, same scenario. If it kind of holds up above that VWAP, gets above tomorrow's volume weighted average price, low risk entry here with a stop here. You can't be buying breakouts up here and protecting with a stop way down here. That's simply too much risk, especially when you say, where have we come from? We've come from 250 to 288. We've rallied 38 points. That's, what is that, 15%? That's a big rally. Chasing up here and having wide stops rather doesn't make any sense. The biotech stocks, even they are back above the year-to-date volume-weighted average price finally, and perhaps these guys see some further bounce. I would be looking for the same exact type of scenario, a pullback first, maybe even down to the volume-weighted average price from Tuesday. So let's say it does something like this. This would be the preferred scenario, really. It holds above the 3-day VWAP, gets back above the 2-day and tomorrow's volume-weighted average price, buying it over here with a stop under there. That would be the scenario that we would look for, but we've got to see what the market gives us. Financial stocks continue to grind higher. They're getting extended. They're closing in on all-time highs. Don't be the person that buys a so-called breakout up here. Look at where it's come from. Energy names were higher here today, but they're starting to slow down a little bit overall. I would say, have your stops in there, protect the gains that you have.